Okay, let's unpack this. We're diving straight into what looks like a really fascinating and honestly pretty counterintuitive strategic move playing out right now in the, well, the very volatile world of crypto-aligned equities.
Yeah.
Just try and picture the scene. It's August 19th, 2025, the broader crypto market. It's seeing a significant sell-off. You've got major players, names you know, like Robinhood, SoFi, Coinbase. They're seeing their values plummet, some down by as much as 5, maybe even 6%. In a single day.
Yeah, a really rough day for that sector.
Exactly. And even ARK's own fintech innovation ETF, which, people often look to as a sort of bellwether for disruptive innovation, even that was down about 3%. So the air was definitely thick with market anxiety. But right in the middle of all this widespread pessimism, what did Ark Invest do? Led by the very influential Cathie Wood. They bought,
yeah.
And not just like a casual little dip buy. No, they made substantial multi-million-dollar purchases. And specifically, in 2 key crypto-aligned equities, Bullish and Robinhood. It's a move that predictably immediately grabbed headlines, and it's definitely sparked some debate. So our mission for this deep dive today is really to peel back the layers of that decision. We want to understand the deep why behind Ark's seemingly contrarian stance, especially during this market turmoil. What do these strategic buys signal about maybe the long-term institutional conviction in crypto infrastructure? And maybe most importantly, what could these insights mean for you, whether you're already a seasoned investor navigating Web3 or maybe you're just curious about where digital finance is actually heading?
Well, what's truly fascinating here, and I think this is really the core theme we need to explore today, is exactly that timing you mentioned. While you had so many investors basically in full retreat, hitting the sell button, watching their portfolios just bleed red ink, Ark Invest was doing something else entirely. They were demonstrating this remarkable form of strategic repositioning. They were actively buying into the very dip that everyone else seemed to be fleeing from. And look, this isn't just about being a contrarian for the sake of it. I think it speaks to a very deliberate long-term vision, a vision that stands in really stark contrast to the prevailing short-term market sentiment we saw that day.
Right.
It feels like they're trying to sift through all that immediate market noise, identify what they see as, profound, maybe undervalued potential, precisely where others might only be seeing escalating risk.
It's classic Ark. In a way, isn't it?
It absolutely is a classic Ark play, but maybe amplified, you could say, by the unique volatility of the crypto space itself. It makes the move even more significant. And when we start to dissect the actual targets of these investments, Bullish and Robinhood, it's really crucial we understand them beyond just their surface market perception. We're not talking here about Ark making direct investments in, say, Bitcoin or Ethereum, those highly volatile crypto assets themselves.
That's a key distinction.
It really is. Instead, Ark is focusing on what we could call crypto access platforms, or maybe gateways to digital asset exposure. Think of them like the foundational plumbing, the essential infrastructure that actually enables mass interaction with and investment in the broader digital economy.
Okay, so the picks and shovels analogy.
Exactly. That distinction is paramount if we want to grasp Ark's strategic intent here. They are, in essence, making a very calculated bet on those picks and shovels of the crypto gold rush. They seem to believe that the real long-term value accrues to the platforms that facilitate the access, the utility, rather than solely to the underlying digital gold itself. And this approach, it suggests a belief in the sustained growth of the whole ecosystem, not just riding the speculative price waves of individual tokens.
That distinction really does shift the perspective, doesn't it? It moves the conversation away from just predicting coin prices towards understanding, like you said, foundational growth. So, okay, with that sort of overarching philosophy in mind, what were the tangible assets Ark was actually scooping up? Can you break down the exact scale of their purchases during that August 19th downturn?
Absolutely. And the precise figures, they really reveal a very deliberate, focused allocation. On that single day, August 19th, 2025, Ark Invest purchased a substantial $21.2 million worth of Bullish shares.
$21.2 million, okay.
And their conviction wasn't just limited to Bullish. They simultaneously added another $16.2 million in Robinhood shares.
15.2 in Robinhood, got it.
And all of these acquisitions, it's important to note, were executed through their flagship ARK Innovation ETF, the symbol ARKK. Now, these are not insignificant sums, especially when you consider, as we discussed, the widespread market apprehension at that exact moment.
Right.
It clearly signals a concentrated effort rather than just some kind of diversified minor portfolio adjustment.
And what I find particularly compelling
about the Bullish investment. This wasn't Ark's first time getting involved, right? This recent $21.2 million buy, it actually builds on something much bigger. They had an earlier, much larger allocation. I think it was around $172 million into Bullish around the time of its initial public offering.
That's correct. A very significant prior stake.
So this isn't Ark suddenly discovering Bullish. It feels more like a doubling down, a reinforcement of a pre-existing, pretty significant position they already held. And that layered investment approach, buying big early on, and then aggressively buying again into a dip that really does signal a consistent, maybe even growing confidence in Bullish's long-term path. And just to add another layer of, let's say, conviction to this whole narrative, Bullish is notably backed by Peter Thiel.
A name that carries weight.
Definitely. For an informed audience like ours, Peter Thiel's name attached to a tech company, it isn't just a name drop, is it? It usually signifies a belief in fundamentally disruptive technologies. Plus, it often comes with, strategic insights, extensive network connections, things that can really accelerate a company's growth and its market penetration. And just for clarity, we've meticulously cross-referenced all these figures across multiple reputable financial sources, investing.com, CoinDesk, The Block, Barron's, Benzinga, just to ensure the accuracy of these really pivotal transaction details.
So let's get into the why behind these moves, especially, like we keep saying, happening right in the teeth of a broad market downturn. This really illuminates Ark's distinctive investment philosophy because this isn't just about the simple, almost cliche act of buying low.
Right, it's more nuanced.
Much more. It seems to represent a profound strategic repositioning within their portfolio, a very conscious decision to re-weight towards what they identify as core long-term value plays within this whole digital asset ecosystem. Ark isn't simply speculating on a quick bounce back here. They appear to be demonstrating a deep, almost unshakable conviction in the enduring value of these specific crypto access platforms. And this divergence, the general market hitting panic sell mode while Ark is aggressively accumulating that divergence, is where the core aha moment for understanding institutional investment in volatile markets really lies, I think.
Yeah.
It strongly implies a belief that the market is fundamentally mispricing these assets based on short-term sentiment, and it's overlooking their fundamental, potentially disruptive potential. And the strategy is just a quintessential manifestation of Ark's well-known investment ethos, isn't it? That unwavering commitment to betting big on disruptors.
Absolutely. So how does Bullish fit that disruptor mold specifically?
Well, let's look at Bullish first. From Ark's perspective, Bullish isn't just another crypto exchange popping up in what's becoming an increasingly crowded market. It's designed, or at least marketed, as a truly crypto-first exchange model, built from the ground up, supposedly, to address the unique demands and possibilities of digital assets.
Okay, crypto first. What does that mean in practice, like technically?
Well, it implies a platform engineered with blockchain architecture right at its core. This, in theory, enables features like near instantaneous settlements, maybe more transparent on-chain auditing capabilities, and access to deep liquidity pools that might feel more akin to what you'd find in decentralized finance, or DeFi.
Okay, so bridging CeFi and DeFi.
That seems to be the goal. The company explicitly talks about wanting to merge the best of centralized and decentralized finance. So they aim to offer institutional-grade security, regulatory compliance, robust customer support, which are hallmarks of traditional centralized exchanges, while simultaneously leveraging the transparency, the efficiency, maybe even the liquidity advantages often associated with DeFi protocols. Now, this hybrid approach, trying to bridge that liquidity gap between CeFi and DeFi, it represents a significant technical challenge, but it's also a key potential differentiator. And that aligns perfectly with Ark's focus on foundational, potentially game-changing innovation.
So an ambitious play.
Very ambitious. It's a play to build what could be the definitive institutional gateway for digital assets. At least that seems to be the vision Ark is buying into.
Okay, that covers Bullish. What about Robinhood? How does that fit Ark's innovation focus?
Right, then there's Robinhood. Now, while it's widely recognized, obviously, for democratizing stock and options trading for retail investors, its strategic importance to Ark, particularly in this context, seems to lie squarely in its rapidly expanding crypto arm. Robinhood's core mission, democratizing reach in financial services, has extended pretty seamlessly into the crypto space. They've made digital assets accessible to literally millions of everyday investors, people who might otherwise find the whole crypto world intimidating or maybe just too technically complex to navigate.
Yeah, they definitely lowered the barrier to entry for many.
Exactly. And for Ark, Robinhood isn't just another trading app. It's potentially a powerful engine for mainstream crypto adoption. They're not just offering crypto, they're simplifying the user experience, they're providing educational tools, they're lowering those barriers to entry we mentioned. And by doing that, they're effectively expanding the entire crypto ecosystem's potential user base exponentially.
So the sheer reach is a key factor.
Right. Absolutely. That widespread accessibility is crucial for long-term growth, and it validates Robinhood as a critical piece of the broader Web3 puzzle in Ark's view. They seem to see the significant user base and the platform's proven ability to onboard new crypto users efficiently as a core value driver, almost irrespective of the short-term price volatility of Bitcoin or other coins.
Okay, that makes sense. So for you, the listener, maybe you're trying to make sense of all this. These strategic moves from Ark, what are the implications?
Well, I think they're profound. Ark's aggressive purchases, particularly timing them during a market dip, could very well serve as a potent signal to the rest of the market. It could potentially spark renewed investor interest in crypto equities more broadly.
How so?
Well, Ark is, in essence, validating these specific companies, Bullish and Robinhood, as not merely speculative plays on the price movements of crypto assets, but as robust, viable, and maybe fundamentally important gateways to digital asset exposure. And this holds true even, and perhaps especially, during periods of intense market volatility like the one we saw.
Right. Changes the narrative slightly.
It really encourages a vital shift in perspective. Instead of solely scrutinizing the daily, often wild fluctuations of individual crypto assets, Ark prompts us, and maybe you listening, to look at the companies that are diligently building the essential bridges, the infrastructure, that facilitate mainstream crypto adoption.
So it refines that picks and shovels idea we touched on.
Exactly. It's a nuanced application of that thesis. It suggests that these foundational platforms might offer a more resilient, perhaps more predictable, long-term investment profile in this still very nascent market compared to the assets themselves.
That's a really crucial refinement, yeah. Investing in the enduring infrastructure, not just the fluctuating assets. And, to truly understand Ark's conviction here, we have some fascinating case studies that offer pretty powerful proof points for their strategic foresight. And here's where it gets really interesting for me. Let's dive into Bullish's recent IPO, because this was far from a quiet market debut, wasn't it?
Not at all. Very splashy.
Bullish didn't just perform well, it soared. An incredible 84% on its debut day.
84%. Yeah, that's a number that makes people sit up and take notice.
Absolutely. It demonstrated exceptionally strong investor appetite right out of the gate. A clear market validation. That's not just a small win. That feels like a massive declarative statement from the market about its perceived value and its potential.
And Ark Invest, they weren't just passive observers watching this impressive performance from the sidelines. They were deeply involved, right?
Very much so. During that initial surge, Ark was identified as a major buyer. They strategically acquired something like 2.5 million shares across their various ETFs.
2.5 million shares during the surge.
Correct. And this demonstrates that their conviction in Bullish wasn't merely a reaction to finding a post-downturn bargain later on. It was a consistent pre-existing belief, even during a period of rapid upward growth at the IPO.
So this kind of dual-phase investment, buying big at the IPO and then doubling down during a downturn, that really underscores their long-term vision for the company, doesn't it?
It paints a very clear picture of sustained belief, yes. And again, just for context, this information about the IPO surge and Ark's buying was widely reported by outlets like the Economic Times, Barron's, and Benzinga. So it provides concrete evidence of Bullish's robust entry into the public market and Ark's strategic engagement from the start.
An 84% debut surge, particularly for a company operating in the crypto space, it signifies several really critical things about early institutional confidence. First, it just loudly proclaims that a significant segment of the market perceives Bullish not merely as, a trendy new stock, but potentially as a truly disruptive force, one that might be poised to redefine the exchange landscape.
So genuine belief in the model.
It seems so. It's a vote of confidence in their fundamental business model, their technology, and that ambitious vision we talked about for merging CeFi and DeFi. And the fact that Ark was a substantial buyer during that initial surge and then again during a broader market sell-off later, well, that speaks volumes. It suggests a profound, really deep-seated belief in Bullish's long-term trajectory and its capacity to capture a significant share of this evolving digital asset market. They clearly believe Bullish is designed not just to survive, but to thrive as a critical component of the future Web3 financial system.
Okay, that makes the bullish case very compelling. Now let's shift our focus back to Robinhood. It's a name most people listening probably know. Ark's deepening interest there, as you said, seems driven by Robinhood's crypto arm, not just its stock trading.
Exactly. And it's not just potential. We've seen some truly remarkable financial performance coming out of Robinhood's crypto segment specifically. Performance that undeniably would have caught Ark's discerning eye. Specifically, if we look at Q2 figures, Robinhood's crypto revenue jumped, get this, a stunning 98% year over year.
98%.
Wow.
Soaring to $160 million in crypto revenue for the quarter. To almost double your crypto revenue in a single year, especially in a market segment known for its ups and downs, that's a real testament to strong product-market fit and effective monetization strategies.
That's incredible growth. What about activity, like trading volumes?
Yeah, beyond just the revenue, the underlying activity metrics, they reveal an even more compelling story, perhaps. Their crypto trading volumes climbed an impressive 32% year over year, reaching $28 billion in volume for the quarter.
$28 billion in crypto trades.
Now, these aren't just abstract fees on a spreadsheet, right? They represent millions of individual investors actively engaging with, trading, and exploring digital assets on the Robinhood platform, and doing so at an accelerating rate.
So sustained user adoption and increasing engagement.
Precisely. And what was Ark's response when they saw this undeniable momentum building in Robinhood's crypto business?
They doubled down. They doubled down, exactly. They significantly increased their stake in Robinhood, underscoring that their investment wasn't just some token gesture, but a really robust backing of Robinhood's fundamental growth and its expanding footprint in the crypto space.
Right.
And these robust figures, highlighted by sources like Cohen Central, among others, they provide really compelling validation for Ark's unwavering conviction in Robinhood. They see it as a crucial gateway, bringing digital assets to the mainstream investor.
Okay, so when we connect those robust revenue numbers, the trading volume figures for Robinhood, to the bigger picture.
Yeah,
it's incredibly validating for Ark's thesis, isn't it? They demonstrate that Robinhood isn't just like a participant in the crypto space. It's becoming a dominant and rapidly growing crypto access point.
absolutely. And this isn't just about fleeting market sentiment or, purely speculative trading bubbles. It reflects genuine fundamental strength in their business model and their user acquisition strategies.
The sheer volume, the $28 billion, it suggests more and more users are actively getting involved with crypto on their platform.
Right. And the revenue jump, the 98%, clearly indicates that Robinhood is effectively monetizing that increased engagement. They're making money from this growing user base.
Which kind of justifies Ark's confidence, right?
Right.
Even when the broader crypto market, and therefore the crypto-aligned stocks, might be taking a hit.
Exactly. It tells Ark, or at least suggests to them, that Robinhood has built a resilient platform, one that continues to attract, onboard, and retain users interested in digital assets, regardless of those short-term, sometimes dramatic price fluctuations of the coins themselves.
So for Ark, the focus is clearly on the strength of the underlying business, its expanding user base, its potential for continued adoption, rather than merely trying to ride the waves of crypto asset prices.
Precisely. This data strongly reinforces that picks and shovels thesis we keep coming back to. It showcases that the platforms facilitating access are generating real, measurable value that seems to transcend the day-to-day market volatility. Okay, so let's try and transcend the sort of anecdotal evidence now and really dive into what the quantitative insights truly tell us. Let's connect these specific moves by Ark to the broader implications for the market and, crucially, for you listening. Our team actually conducted a pretty thorough analysis of the available data, and it does reveal some intriguing patterns about Ark's timing and the depth of their conviction.
Okay, let's hear it. What did the numbers show?
All right, first, let's talk about equity price versus the event timeline. We meticulously plotted the stock prices of both Bullish and Robinhood around Ark's specific purchase dates on August 19th. And for Bullish, we also looked at the price action around its recent IPO. Our analysis revealed something quite compelling. While Ark indeed bought into that dip on August 19th, their initial much larger purchase in Bullish, the one around its IPO back in early 2025, that actually preceded a significant portion of its incredible 84% surge on debut day.
So they were in before the big pop.
It certainly looks that way. This indicates Ark wasn't just reacting to market sentiment or trying to ride an existing wave upwards. They were, in a very real sense, perhaps leading it, identifying what they perceived as undervalued opportunity before it became broadly apparent to the rest of the market.
That's that smart money timing people talk about.
It's definitely a hallmark of their approach, yes. It suggests they have a highly sophisticated method, or at least a strong conviction, for identifying disruptive potential even before the wider market fully catches on. Now, the direct market reaction to Ark's publicized buys on August 19th. It was less about a sharp, immediate bounce for those individual stocks, Bullish and Robinhood. It seemed more about reinforcing a longer-term narrative, meaning other investors might not have rushed in immediately just because Ark bought, but Ark's stated conviction tends to set a kind of baseline expectation for future appreciation. It puts the stock on more radars.
Okay, interesting. What else did the data show?
Next, let's break down Robinhood's crypto revenue trends with even more granularity. That 98% year-over-year jump in Q2 crypto revenue to $160 million, coupled with the 32% year-over-year climb in trading volume to $28 billion. Look, these numbers aren't just impressive in isolation. They're profoundly significant for understanding the broader adoption curve of crypto, particularly among mainstream retail investors.
Oh, so what's the deeper implication?
Well, the exponential revenue growth happening alongside robust volume increases implies more than just user retention. It strongly suggests significant user growth and also increased engagement per user. People aren't just signing up, they're actively trading more.
But they're getting more involved.
Exactly. What this data really tells us is that Robinhood is effectively monetizing its expanding user base in the crypto sphere. And when we link this directly to Ark's increasing share allocation in Robinhood over time, it strongly suggests Ark views this adoption not as some fleeting fad, but as a sustained long-term trend.
They're betting on crypto becoming more integrated.
Precisely. They seem to be betting on the continued deep integration of crypto into everyday financial lives, and they believe Robinhood is a key facilitator, maybe the key facilitator, for that future among retail users. So this isn't just about analyzing a single good quarter, it's about interpreting a trajectory that indicates crypto might be moving decisively from a niche interest towards the mainstream.
Okay, that makes sense. What about comparing them to competitors?
Good question. We moved on to comparative performance. We compared the price trajectories of Bullish and Robinhood against some of their direct competitors, like Coinbase, and also against broader fintech stocks, SoFi, for instance, during that specific period of the crypto stock tumble in August.
And what did you find there? Did Ark's picks hold up better?
What we found was quite interesting. While all crypto-aligned equities faced significant pressure during that sell-off, Bullish and Robinhood, particularly in the days immediately following Ark's stated buys, showed slightly greater resilience relative to the really sharp drops experienced by some of their peers.
Okay, so relative strengths.
A degree of relative strength, yes. Now, this suggests, and we have to be careful not to overstate it, but it suggests that Ark might indeed be seeing some relative resilience in their chosen bets, perhaps due to what they perceive as stronger fundamentals or maybe a unique positioning within that crypto access space. It implies it's not simply about buying anything crypto-related at a lower price point and hoping for a broad market recovery. It seems to be a more specific belief in the superior underlying business models or growth pathways of Bullish and Robinhood compared to some of their competitors.
So buying the perceived strongest horses in that particular infrastructure race.
That seems to be the logic, yes. They're being selective even within the dip.
Fascinating. Any other quantitative insights?
Yes. One final crucial piece: the ARK ETF weight analysis. This gives us a direct insight into Ark's internal conviction levels. We examine what percentage of the actual ARK Innovation ETF, ARKK, is now allocated to these holdings, Bullish and Robinhood, compared to earlier periods, specifically looking back at the previous quarter.
And what did that show? Did the weighting change significantly?
Our analysis shows that Ark has moderately increased its percentage allocation to both Bullish and Robinhood within the ARK ETF.
Moderately increased, okay.
Now, this naturally raises an important question. What does this subtle shift in portfolio weighting actually reveal about Ark's changing conviction or maybe their desired concentration in this crypto access sector?
Right. Is it a major pivot or just tinkering?
Well, while it's certainly not an all-in bet solely on these two companies, ARKK is still diversified. This shift is definitely more than just minor reallocation or simple rebalancing. It signals, I believe, a deliberate strategic move to actively increase their exposure to this specific segment of the crypto market, the access platforms. It reflects a deepening conviction in the long-term prospects of these crypto infrastructure companies. It confirms that Ark is actively consolidating its bets on what it believes are the most promising picks and shovels available in the burgeoning digital economy.
So it reinforces the idea that this isn't just opportunistic buying, it's a strategic deepening of their core investment thesis.
I think that's a very accurate way to put it, yes.
Okay, wow. That quantitative breakdown provides immense clarity on the why and the how behind Ark's move. So let's bring it back now. What does all this sophisticated analysis, all these numbers and comparisons, truly mean for you sitting there, maybe listening, trying to synthesize all this information? We've dissected Ark's institutional conviction, how it contrasts with that short-term market panic.
Yeah.
But how does that translate into your own strategic thinking about this market?
Yeah, this is where the macro implications become truly fascinating and potentially actionable. Ark's bold moves, especially coming from such a prominent, highly visible firm known for its audacious bets on disruptive tech, well, they could profoundly influence broader investor psychology.
How so? Like a ripple effect.
Exactly. When a firm like Ark Invest makes such significant purchases during a market downturn, it often functions as a powerful signal to the rest of the market. It suggests to other institutional players, other funds, maybe even sophisticated retail investors that this might actually be a smart money, buy the dip strategy in play.
Right, if Ark is buying, maybe we should look closer.
Precisely. It hints that there could be overlooked value here, or perhaps that the current market fear is, in the longer run, overblown relative to the fundamentals. This can, over time, inspire a renewed sense of confidence. It might lead to a broader reevaluation of these crypto equities and potentially contribute to their eventual recovery. It's a form of market leadership, you could say, where their demonstrated conviction can inspire similar thinking, if not immediate moves, from others.
Okay, so influencing psychology. What about the practical impact on the Web3 ecosystem itself?
That's another critical angle. When we think about the wider Web3 ecosystem, this kind of strong, deliberate investment flowing into the gateways, these companies like exchanges and trading apps that provide the essential on-ramps to the digital asset world, is incredibly significant. It fundamentally strengthens the underlying infrastructure that's absolutely needed for wider crypto adoption to actually happen.
It builds a stronger foundation.
Exactly. Regardless of the immediate price fluctuations of Bitcoin, Ethereum, or whatever else, if the platforms making those assets accessible are robust, well-funded, secure, and crucially user-friendly, it lays a far more stable and resilient foundation for the entire ecosystem to build upon.
Makes sense.
It's really about building the necessary, reliable plumbing for a potentially decentralized future, ensuring that as mainstream interest and demand for crypto services inevitably grow, the means to participate are readily available, trustworthy, and operate efficiently. This really moves the conversation beyond just speculation on coin prices. It's about actively building and funding the utility layer of the future internet.
Which brings us back to that really thought-provoking question about where value ultimately accrues in this new digital economy, doesn't it?
It absolutely does. Is the real long-term potential truly centered on the picks and shovels, these platforms, the infrastructure, the essential services they offer? Is that where the enduring value lies rather than solely in the gold, which are the crypto assets themselves?
Ark's actions certainly seem to lean into that idea.
They do lean that way, suggesting that the enduring value might reside more in enabling access and participation rather than just holding the underlying digital assets directly. However, it's also worth acknowledging the nuance here, especially in the Web3 paradigm. Sometimes the plumbing itself has a native tokenized value, which kind of blurs the lines between infrastructure and asset.
Right, like exchange tokens or governance tokens.
Exactly. Some decentralized exchanges, for instance, issue governance tokens that gain value directly as the platform itself grows in usage and volume. So Ark's bets on the equity of these platforms, like Bullish and Robinhood, hint at this evolving dynamic. The platform's success directly accrues value to its underlying equity, or potentially even a token, if these platforms were structured differently. It creates potentially a more symbiotic relationship between the picks and the gold than we might see in traditional markets.
A fundamental reevaluation, then, of where the most sustainable compounding value might actually be generated in the Web3 space long term.
I think that's precisely what Ark is grappling with and betting on.
Okay, this has been a deeply insightful exploration into Ark Invest's strategic thinking, the data behind it, and the broader implications for the entire crypto ecosystem. Really fascinating stuff. Now, though, we want to shift the focus squarely onto you, our listener. We've laid out the arguments, the data, the context. So after hearing all this nuanced analysis, Do you think Ark Invest is truly buying bargains here? Are they identifying inherent undervalued worth in companies like Bullish and Robinhood? Or conversely, do you think they might be doubling down on hype, maybe taking a bold, perhaps higher risk bet on future market sentiment, turning positive again, maybe hoping for renewed speculative interest? It's a critical distinction for any investor to consider. And thinking about the arguments we've discussed, if you were making the investment decision right now with your own capital, would you rather invest in the infrastructure of crypto, companies like these platforms and exchanges we've talked about? Or would you prefer to put your capital directly into the digital assets themselves, the Bitcoin, the Ethereum, the altcoins?
Both paths have compelling arguments, but Ark's recent actions definitely suggest a preference. What's yours? And looking at the current market dynamics, acknowledging the volatility that's always present, do you personally believe now is truly the optimal time to buy the dip in crypto stocks like these? Or should we, as prudent investors, perhaps wait for more stabilization, maybe wait for a clearer, more definitive sign that the market has actually bottomed out before jumping in? It's that perennial question of risk tolerance versus potential reward, isn't it?
Always the toughest call.
Definitely. Now, when you consider the different ways people access crypto, which type of access point do you think holds more long-term potential? Is it the specialized, maybe more institutionally focused crypto-first exchanges like Bullish, or is it the broader democratizing platforms like Robinhood, which integrates crypto into a wider suite of everyday financial products? Each model has its unique strengths, caters to different user segments. Which do you think wins out? And maybe the toughest question, if you had to pick just one for a long-term investment right now, Bullish or Robinhood, who would you bet it? And more importantly, why? What are the primary factors that would sway your decision? Is it their business models, their user growth trajectory, their unique competitive advantages, or maybe their stated long-term vision for the Web3 economy? We'd genuinely love to hear your thoughts on these critical questions.
Yeah, absolutely. And just to quickly recap the core insights from our deep dive today before we wrap up. Ark invests significant multi-million-dollar buys into Bullish and Robinhood, executed precisely during that broad market sell-off. These are far from random acts. They unequivocally reflect, I believe, a strong, deliberate, long-term institutional conviction, specifically in crypto access platforms.
Right, the infrastructure.
Exactly. This isn't about chasing short-term gains on coin prices. It seems to be about a strategic belief in the fundamental, enduring role these types of companies will play in the future of finance and the broader Web3 ecosystem. And that divergence in sentiment we keep highlighting, where Ark is actively acquiring shares while many others are divesting or panicking, that powerfully highlights their strategic foresight, or at least their willingness to bet on it. It shows their ability or their attempt to look far beyond the immediate market volatility, focusing instead on what they perceive as the disruptive potential of the underlying technology and the business models themselves.
Absolutely. It's undeniably a bold and calculated move, and it really does speak volumes about their vision for the future of finance. And, it leads us to a truly provocative thought to leave you all with. Something maybe ponder long after this deep dive concludes. Could institutional investors like Ark Invest be seeing or betting on a future where crypto-aligned financial services become not just as ubiquitous as traditional banking, but perhaps even more indispensable? And if so, could that make the essential gateways to platforms like Bullish and Robinhood that facilitate access potentially even more valuable, more resilient investments than the digital assets themselves in the long run?
That is the multi-trillion-dollar question, isn't it?
It really is. It's a fundamental question about where the true, enduring wealth and utility in this whole Web3 ecosystem will ultimately reside. Food for thought. Now, if you're liking this deep dive into Ark Invest's strategic crypto equity moves and how it all connects to the broader Web3 landscape, please remember that your engagement truly helps us continue creating quality content just like this. Subscribing to the deep dive right here, maybe leaving a comment down below with your answers to some of those questions we post.
Yeah, we'd love to read those.
Definitely. Or even just engaging with the video if you happen to be watching, giving a like perhaps. All of that genuinely helps support our channel. It significantly boosts our visibility in the algorithms. And it allows us to keep bringing you these sharp, timely insights into the constantly evolving world of crypto, finance, and beyond. So thank you for tuning in, and please stay tuned for more deep dives coming your way soon.